Welcome back to the deep dive. You bring us the sources, and well, we jump right in. We unpack them, pull out the essentials, the key insights, so you get the information you need without drowning in data.
Yeah, exactly.
And today, we're diving into something really transforming how people handle money in Nepal. It's this powerful wave of fintech, digital wallets, the idea of neobanks, even AI.
And our main source for this dive is a pretty comprehensive study. Looks right at the Nepalese banking sector, the whole economic picture, consumer behavior, and really importantly, how the traditional banks are trying to respond, to stay on top.
It really focuses on a fascinating question from that source. Is this fintech surge a huge disruptive tsunami for Nepal? Or is it more like a gradual, maybe challenging evolution the system's adapting to?
Right. And to figure that out, the source first lays out Nepal's economic context. Things are showing signs of recovery, which is good news, but there are definitely challenges. Yeah. GDP growth forecasts for the next fiscal year, FY 2024-25, they vary a bit. The government's hoping for around 4.6%, while bodies like the World Bank, ADB, they're forecasting a bit lower, maybe 4.4%, 4.5% for FY 2025. IMF's looking at about 4.0% for 2025.
So some variation there. And inflation.
Inflation looks moderate, projected around 4.9% to 5% in 2025.
And the source highlights something quite unique about Nepal's economy remittances.
Oh, absolutely. It's massive. Money sent home by Nepalese working abroad makes up a huge chunk of the economy, like somewhere between 21% and 25% of GDP.
Wow, a quarter of the economy.
Yeah, and that inflow is critical. It really props up the balance of payments. There was a healthy surplus recently, and it boosts foreign exchange reserves significantly. Enough to cover more than 14 months of imports as of mid-April 2025.
So remittances are vital, but the study mentions a potential downside, this Dutch disease.
That's right. When you have such high remittance inflows, it can effectively make the local currency stronger. This can make it harder for local industries, think manufacturing or agriculture, to compete internationally.
Ah, I see.
And this, along with other things, contributes to a pretty high trade deficit. The source also notes that, ongoing political instability doesn't exactly create the best environment for long-term investment.
Okay, that sets the scene economically. What about the traditional banks themselves? They've been the backbone for so long.
They really are central. The system is dominated by 20 commercial banks. But the study does flag a major challenge right now: rising non-performing loans. NPLs.
NPLs, how serious is that becoming?
Well, the average NPL ratio for commercial banks hit nearly 5%, 4.83% actually, in the third quarter of FY 24-24-25. That's higher than the IMF's figure on the same time, so it's, a worrying trend.
And the study says this is happening even though interest rates have been falling. That seems counterintuitive.
It does, yeah. And it suggests there might be deeper structural issues at play. Could be about the quality of loans made earlier, maybe lingering effects from the pandemic hitting businesses, or broader things like skilled workers leaving the country, the brain drain, and maybe lower labor productivity affecting people's ability to repay.
Right.
Banks generally meet the capital and profitability rules, but they're definitely feeling the strain.
So, a tough environment. But these traditional banks must have built up considerable strengths over decades, right?
Oh, definitely. Their biggest asset, according to the source, is trust. Decades of being physically present, providing service. It's built a really high level of public confidence. And that's huge in a culture that values personal relationships.
And that physical presence is everywhere, isn't it?
It is. Thanks to a central bank policy, you've got bank branches or service points in all 753 local government areas. A big bank like Rastriya Banijya Bank, for example, has over 300 branches. And this network is just vital, especially in rural areas where most people live, and also for older generations who maybe aren't as comfortable with purely digital options.
But that history and size probably comes with downsides too, weaknesses.
Absolutely. The study points to, bureaucracy. Decision-making can be slow in these big institutions, and there's often some resistance to change, which makes them slower to adopt new tech compared to, say, nimble fintech startups.
And infrastructure challenges are still a factor in Nepal.
Yeah, definitely. Internet penetration isn't uniform. It's about 56% nationally, maybe a bit more now, but it's significantly lower outside the main cities. And digital literacy, just knowing how to use digital tools safely and effectively, that's still quite low for a big part of the population.
You mentioned culture earlier. How does that Nepalese context, like Afno Manche, that emphasis on personal connections, play into all this?
It's a really important factor. The source suggests that Afnamarncha, knowing someone, having a connection, can sometimes influence decisions, including lending. This is sometimes called kripabad or natabad, sort of like favoritism or nepotism.
Okay.
And this makes it more complicated to adopt purely objective systems, like AI credit scoring. It might even contribute to the NPL problem if lending isn't always based purely on risk assessment. Plus, the traditional respect for hierarchy and elders can influence how banks operate internally and what customers expect, sometimes favoring that face-to-face interaction.
That's a crucial layer of understanding. Okay, let's dig into those fintech tsunami elements then. Starting with the one most people probably use every day. Digital wallets. How big are they really?
They are arguably the biggest wave right now. They've completely changed payment habits for millions of people. Paying utility bills, topping up your phone, online shopping, sending money instantly. It's all happening through wallets.
Who are the main players here?
eSewa is the big one, the pioneer. They've got over 10 million users, maybe around 80% of the market. Kulti and IME are also major forces, each with millions of users. And the source mentions they might merge, which would create a really strong competitor.
Right.
And then there's PhonePe, which isn't a wallet itself, but the network that makes a lot of these QR payments possible. Overall wallet users, huge. Over 25 million by early 2025.
That kind of scale must mean massive transaction volume.
It really does. PhonePe apparently processed over 1 million QR transactions in just one day recently, worth billions of Nepalese rupees. The total value of all digital payments is projected to hit over 3.6 billion US dollars this year and could nearly double in just a few years.
And QR codes seem to be the key driver for this.
Absolutely. They're just so easy. Easy for customers, easy for small shopkeepers. The number of QR codes issued to merchants has exploded over 2.3 million. And the central bank, NRB, has been pushing for standardization, making sure different systems work together, which is really key.
So, faced with this digital wallet boom, how are the traditional banks fighting back? They can't just sit there.
No, they're definitely reacting, taking a few approaches, really. One is straight-up competition. They're pouring money into their own mobile banking apps, adding more and more features to compete directly with the wallets. Sometimes aiming for that super app idea, like Nabil Bank's N-Bank.
Trying to keep customers in their ecosystem?
Exactly. Another way is partnership. They're integrating with the popular wallets using APIs. Those are the bits of software that let different systems talk to each other.
Right.
So banks link their accounts to Kulti, for instance, or they enable payments through international systems like WeChat Pay via partners. Global IME banks specifically teamed up with the IFC, the International Finance Corporation, to boost their digital banking efforts.
And some are even building their own platforms.
Yes. Global IME also launched its own global payment gateway, trying to control more of that transaction flow themselves.
So, why does this wallet dominance matter so much for the banks? Beyond just losing transaction fees, what's the key takeaway for you, the listener?
Well, this is where you really see that potential tsunami effect.
Yeah.
Banks risk losing the direct customer relationship. If your wallet app is your main tool for daily payments, that becomes your primary financial touchpoint.
Makes sense.
The bank loses that regular interaction point. That means less data about spending habits, fewer chances to cross-sell other things like loans or insurance. Wallets have succeeded by solving everyday problems simply, and by building huge networks of agents' distribution channels, the banks are now scrambling to match digitally.
And the source mentioned potential consolidation like Kulti and IME Pay merging. That would ramp up the pressure.
Definitely. A bigger combined wallet company would have more users, more data, probably more money to innovate and market really aggressively. That would put even more pressure on the individual banks.
Okay, moving beyond payments. The study also looks at neobanks in Nepal. Remind us, what exactly is a neobank?
Simply put, it's a bank that's purely digital. No physical branches at all. Everything happens through an app or website.
Are there any actually operating in Nepal now?
Not yet. No licensed neobanks are active right now, but the source definitely explores their potential, and it identifies who they might target if they do launch.
Who would that be in Nepal?
The study points to the young, tech-savvy crowd. A big chunk of under 35s are early adopters. Also, maybe digital nomads, Nepalists living abroad who need easy remote access, people in remote areas who have internet but no branch nearby, and importantly, that roughly 18% of the population is still considered unbanked.
What kind of services might they offer?
Basics, accounts, cards, transfers, but also potentially things like microcredit for small businesses, insurance, and those crucial remittance services.
And their main advantage would be?
Lower costs. No expensive branch network, Means they could potentially offer better rates, lower fees, maybe even free basic services. Plus, they promise convenience, speed, and they can often innovate much faster than the big traditional players.
Is the regulator, NRB, open to this? Are they making space?
Well, the government has signaled it wants to facilitate neobanks. It was even mentioned in the budget plan for the next fiscal year. But a specific licensing framework from NRB isn't quite there yet. They need clear rules for things like eKYC, verifying customer identity online, and adapting anti-money laundering rules for a completely digital model.
So traditional banks don't have a direct neobank competitor yet, but just the idea of them is pushing banks to act.
Absolutely. That government signal is a big deal. It raises customer expectations. So traditional banks are investing heavily in their own digital platforms, partly to offer neobank-like features themselves. The BLZN Bank is a good example here, moving towards remote account opening, online ID checks, alongside all the payment stuff.
What would be the biggest hurdles for neobanks if they did launch in Nepal?
The source points to those infrastructure gaps, again, that uneven internet access. But maybe even more critical are the sociocultural challenges. Low digital literacy is one, but also that deep cultural value placed on aftermarket, on trust built through personal interaction.
Right.
It's going to be tough for a purely digital bank with no physical presence to build that same level of trust from scratch, especially outside the main cities or among older demographics. That said, even if neobanks only grab a small market share initially, their potential impact is still huge. They act as a sort of catalyst, pushing the traditional banks to up their game, improve services, cut fees, and innovate faster. That's the real disruptor effect.
Okay, beyond wallets and neobanks, the study looks at AI, particularly AI for credit scoring. How could that change things in Nepal?
This has massive potential, especially given Nepal's large informal economy where many people just don't have a formal credit history. Traditional scoring looks at past loans. AI scoring, well, it could look at alternative data.
Like what kind of data?
Things like your mobile phone usage patterns, your digital wallet transactions, maybe even your online behavior, with consent, of course. It tries to build a picture of creditworthiness, even without a formal borrowing history.
So it could open up credit for people who are currently excluded.
Exactly. Small business owners, farmers, self-employed people in the informal sector, they could potentially get access to formal loans. The study suggests this could also help banks make more objective decisions, maybe even reduce NPLs over time, assuming the data and models are good. Some banks are already exploring this, piloting AI for risk assessment.
But what are the big challenges to making AI scoring widespread?
There are significant ones. First, data. Getting enough good quality, reliable digital data, especially for people in rural areas or the informal sector, is really hard. Then there's the regulation. No clear framework yet for using AI in lending.
And ethical concerns.
Definitely. Concerns about algorithmic bias. Could the AI unfairly discriminate against certain groups? And data protection is obviously a huge issue too, but AI's potential isn't just about lending.
You mean like chatbots for customer service?
Yeah, that's a common one. AI chatbots can handle basic questions 24/7, freeing up human staff. Banks are also using data analytics, often involving AI, for personalization, trying to understand customer needs better and offer tailored products. Nabil Bank's N-Bank comes up again as focusing on this.
The source mentions a few other fintech areas being explored too.
Briefly, yeah. Blockchain is being looked at for things like secure cross-border payments or trade finance, but it seems quite early stage. Open banking, using APIs to let third parties build services with customer permission, is something NRB encourages. And RegTech, using tech for compliance like AML-CFT, that's very relevant, especially with Nepal being on the FATF gray list.
Now, all this tech needs skilled people, and the study highlights a skills gap in Nepal.
A major one, yes. There's a big demand for data scientists, AI specialists, machine learning engineers, cybersecurity experts, but there's a shortage locally. And it's made worse by that brain drain problem, skilled people leaving for opportunities elsewhere.
Which means banks might have to rely on foreign help.
Often, yes. Relying on foreign vendors, which costs more and can raise other issues around data localization or support.
So AI scoring sounds like a really powerful tool, potentially faster, maybe fairer, reaching new people, but it's hitting these big roadblocks like the data gap and the skills gap.
Precisely. Lack of good data to train the AI, lack of local talent to build and manage it, these are major constraints. NRB's regulatory sandbox, set up in March 2025, is a good step. It lets companies test innovations in a controlled way. but its real impact will depend on how quickly and flexibly regulations adapt afterwards.
Okay, so given all these pressures and opportunities, how are the traditional banks actually coping? What are their main adaptation strategies?
Well, the study confirms they absolutely recognize the need to change. They are investing significantly in digitalization. They know they can't just stand still.
Where are they focusing that investment?
Foundational stuff. First, modernizing their core IT systems, getting rid of old legacy platforms, maybe moving towards the cloud. Then, obviously, enhancing their mobile and online banking is critical, aiming for those feature-rich super apps. And crucially, cybersecurity.
Because more digital means more risk.
Exactly. More transactions online means more potential targets for attack. We've seen incidents in the past involving payment networks or banks, so strengthening defenses is vital. NRB has issued guidelines that banks are working to implement.
What about their huge branch networks? Are they just shrinking them?
Not necessarily closing them all down, but definitely transforming their role and making them more efficient.
Yeah.
Optimizing locations, putting in smart features like self-service kiosks for simple transactions, maybe video banking. It frees up staff for more complex advice.
So branches become less transactional, more advisory.
That's the idea. And they're aiming for what's called an omni-channel experience, making it smooth for you whether you use the app, the website, call them, or walk into a branch.
And customer service generally in this digital shift?
Improving service quality CSAT is key. Things like reliability, responsiveness, making customers feel confident. The study says Nepalese customers really value these. They're also using data for personalization, offering tailored services, using digital loyalty schemes, and encouraging word of mouth.
What about partnering with fintechs? Is that becoming more important?
The study suggests it's becoming almost essential. Fintechs are often faster, more flexible. Banks can partner with them, maybe jointly develop products, use white label solutions branded as their own, or even invest in fintechs to get innovations out quicker than they could manage alone.
Like those examples you mentioned earlier.
Exactly. Like NIC Asia working with Kalti or Wally at Global IME partnering with IFC. It's a strategic necessity now.
And internally, they also need to tackle those cultural hurdles, the bureaucracy.
Yes, that's a big part of it. Fostering innovation internally, trying to reduce the influence of afnomanchi or rigid hierarchies in decisions, simplifying procedures. It's about becoming more agile. It's a cultural change as much as a tech change.
Does the study point to any specific banks that are doing this particularly well?
It gives a few examples. Nobile Bank gets mentioned for its N-Bank super app focus, its investment in AI and data, and it's even won international awards. Global IME Bank is noted for effectively combining its massive physical network, they're in all 77 districts, with digital investment. They call it a phygital strategy.
Phygital, physical plus digital.
Exactly, blending the strengths of both. NIC Asia Bank is also highlighted for its push towards automation, like kiosks, and its active fintech partnerships. That phygital model really seems like the most likely path to success in Nepal's unique context. It leverages the trust and reach of branches while offering the convenience of digital.
Okay, looking ahead then, what are the biggest remaining challenges and opportunities for this digital financial future in Nepal?
Regulation is definitely key. NRB is supportive with things like the sandbox, but they need clear, up-to-date rules for AI, for neobanks, maybe for blockchain applications. It's a balancing act, encouraging innovation while ensuring stability and protecting consumers. And that FATF gray list status means RegTech and strong anti-money laundering efforts are non-negotiable.
And cybersecurity remains a constant threat.
A huge one. As digital volumes grow, so does the risk. It needs ongoing investment, regular audits, training, public awareness. NRB has guidelines, but consistent implementation across the board is crucial.
And that talent shortage, the brain drain issue.
Still a major bottleneck.
Yeah.
Without enough local experts in fintech, data, AI, cybersecurity, banks rely on costly foreign vendors. Addressing this needs long-term efforts in education, retraining, and crucially, creating reasons for skilled Nepalists to stay or return.
Plus, the more fundamental infrastructure and social barriers.
Yes, still very real. Uneven internet access, especially rurally, limits digital inclusion. And low digital literacy is possibly an even bigger hurdle. People need the skills and confidence to use these tools safely. Cost of devices and data can also be barriers for some.
And global factors are at play, too.
Always. Global economic uncertainty affects remittances and investment. Global tech trends set customer expectations. And government initiatives like the Digital Nepal Framework are positive, but need effective coordination and political stability to really deliver.
So let's bring it back to that core question from the source. After this deep dive, is fintech in Nepal a tsunami or an evolution?
The study concludes it's really best seen as an evolutionary transformation, but, and this is important, it has definite elements of a tsunami, particularly in payments. It's not destroying the old system overnight, but these digital ways are undeniably powerful and are forcing fundamental changes.
What does that imply for the near future, say the next 1, 3 years?
Expect continued explosive growth in digital wallets and QR payments, intense competition there. We'll likely see the first pilot neobank services, maybe from existing banks launching dedicated platforms. AI use will probably be limited initially, mostly chatbots, maybe some risk assessment pilots, and a big regulatory focus on shoring up cybersecurity. Looking further out, maybe 3 to 7 years, the source suggests a more mature fintech market, hopefully with clearer regulations. We might see fully licensed neobanks operating by then. AI could be used more widely, potentially making a real difference in credit access. Branches will have settled into their new advisory roles, and the lines between banks and fintechs will likely blur further through more partnerships, maybe even mergers.
Really interesting outlook. So for you, the listener, maybe you work in finance, maybe you just use these services, or you're interested in this intersection of tech, culture, and economics. What are the key takeaways here?
Well, if you're in the banking sector, the message seems pretty clear. Accelerate that digital transformation. Embrace phygital. Invest smartly in data and AI, even with the challenges. Partner actively with fintechs. And tackle those internal hurdles, bureaucracy, cultural influences, to get more agile. Always focusing on the customer and building trust.
And for regulators like NRB.
Keep supporting innovation, like with the sandbox, but work quickly to develop clear, adaptable rules for new tech, like AI and neobanks. Prioritize cybersecurity relentlessly. And crucially, promote digital and financial literacy across the board that's vital for inclusive and safe adoption. For others, like fintech startups or educators, focus on solving real Nepalese problems, look for bank partnerships, and help build that pipeline of local tech talent.
This has been a fascinating look at a really dynamic situation. As Nepal keeps balancing this rapid tech adoption with its unique cultural context, here's a final thought for you to consider. How will that balance between embracing global tech and respecting the local emphasis on personal connection and trust ultimately shape how successful and how inclusive Nepal's financial evolution turns out to be?